computer. Thank you for reminding me. How can you tell? You can tell that I'm not recording. You can tell when I'm recording or not. Well, either way, thank you for reminding me. By the way, so I guess maybe I should ask before I play this Saturday Night Live sketch if there's anybody who just like might be offended by that. In which case, I don't really need to show it. But the reason I'm bringing up is that it has Fred Armisen and Will Forte. Will Forte? I think that's his name. It has some actors who are playing different ethnicities, but it's because it's meant to show a meeting between President Obama and the president of China at the time, who's Hu Jintao was his name. Different president now. But it's meant to talk about a real life summit that these two world leaders had. And why do they have the summit? It was to talk about economic issues that they were both having. Actually, it was during the Great Recession. Another thing you guys are probably too young to remember, but in 2008 and onward, for the next year or two, there was a major recession that was global. The whole world experienced it. And in this country, we had something called like cash for clunkers and other ways to try to stimulate the economy. And they referenced that in this video. So I guess I wanted to show, okay, Gibran, you've seen it. Interesting. Or you, at least you've seen his impression of Obama. Yeah, you'll get to see that in this video if I play it. But if somebody doesn't want me to, can you let me know? I won't play it if you don't want. It's really not meant to be offensive. Although it was meant to be funny, in the sense that Saturday Night Live is a comedy program. Their goal is to just make you laugh. But I want to show it to you because of the way they talk about the debt. The way they talk about the debt it shows the way that we, the public, think about it, and some of the ways that it's wrong. And I haven't found another sketch anywhere else that's as good at that. So if no one minds, you can send me a private message. That way, no one will know that it's you who doesn't want to see it. But I will just, if no one says anything, I will show you this SNL sketch. And I'm wondering if you can hear it okay.
And have a productive dialogue about the serious issues of concern that remain between our two countries.
Can you guys hear this okay? I mean, like if I turn it up on mine, does it make it louder on yours?
Yeah, we can hear it.
You can hear it fine. Okay, this is Fred Armisen as Barack Obama talking about the US and China relationship. I will let it go now. All right, guys. Maybe I should stop there. Yeah, that is a bit crude. I guess the joke there was some of that insult was lost in translation. But a lot to unpack in that video. You see the anger in the president of China saying, how can you be wasting, this is our money that you're giving away for cash for clunkers. You know, you said you were going to pay me back that 800 billion and you're not, you're wasting this money. This is, you think of like a loan shark. You think of somebody who's like, yeah, I loaned you $1,000 and I have to pay you back the next month. And the loan shark comes at your house and is like, I'm going to break your knees unless you give me this money. This is totally the wrong picture. Do you guys have any comments? Like what's wrong? What's a way to correct that sketch, that skit? Any ideas? I mean, the real relationship between US and China, of course, it's changed a lot in the last 10 years. Wow, that's 13, 12 years old. But the debt relationship is really what I'm talking about. They still, do we still owe them $800 billion? What do you think?
Isn't it more now?
I think it is more now. Not that much more, but it is more now. Is it over $1 trillion? I don't think it is. Maybe.
I mean, we have over $21 trillion in debt, so.
Yeah, but the amount that China has hasn't changed that much.
Don't they only own like 10% of our total debt?
So you think it's like in closer to 2 trillion?
If I remember correctly, I think I saw a figure that was like 80% of US debt is held by the public, which would leave 20%. And if I remember right, China owns about 25% of our foreign held debt.
Okay. Well, so they still have about $1 trillion of our debt. We'll give them that. I'm not even quibbling about the dollar amounts, the money amounts. I'm talking about the relationship between us and China. That was implied by that video. It was adversarial, wasn't it? Hu Jintao was like, stop wasting our money on healthcare, on cash for clunkers. You owe us that money. If you actually owed like your friend some money and your friend saw you like buy a new PlayStation, your friend might be kind of pissed at you. Like, what are you doing? You bought a PlayStation instead of paying me back. That's a real life thing. And that's what the writers of that skit were playing off that for humor. But I just want us all, we students in economics, to realize that that's wrong. That is not how it works. I have a slide here to tell you kind of the ways that I think is important to show how it's wrong. Where is it? Right here? Sorry. Slideshow. Current slide. Okay. What did it get wrong about us owing $800 billion to China? It's like we're embarrassed because we don't have it and they're angry at us. That's wrong. China hasn't lost the $800 billion. It's not like they gave away $800 billion and now they're just hoping that they get it back. That is not true. What they did was invested their money, invested not even their money, but just their capital. They had loanable funds that they wanted to invest in something, and they chose to hold United States Treasury securities as their investment. It's not that the money went away. It's right there in form of Treasury securities, which are as valuable as money. So it hasn't lost the money. Next point, we didn't ask China for this money. That is not how the Treasury works. We don't say, oh gosh, can I borrow some money? And when we start, asking all of our friends, hey, we've been really good to you. Will you be good to me and loan us some money? That's not how it works. It's an open market where foreign central banks are players in this market. They can obtain these Treasury securities if they want to. And that's what happened. We don't determine when, next bullet point, we don't determine when they get their money back. If they want their money back, they actually can get it. With a Treasury security, all you do is you wait for it to mature. Once it matures, you get that money back in cash. You'll get it in dollars, but you can still get it back. And you might say, well, what if that happens? That would be horrible. It would actually change our market a lot if that happened, right? If China all of a sudden said, we don't want to hold any more Treasury securities, it means that that demand for our Treasury securities would go away. Somebody else would have to pick up that demand, and they would. It would just be a shift of the demand curve for our Treasury securities. But China at any time actually could go ahead and get their money back. It's a little bit more complicated because China doesn't want to do something that would harm our economy because they export so much to the United States. So when the United States has a bad run of the economy, it hurts China too. So it's a little bit more complicated than that, but still, I feel like that's a point they got wrong. And then this last one is also very important. There's absolutely no shortage of assets that are available to pay China back. It might sound unbelievable to us that, wait, $800 billion, which is what it was at the time, how could we come up with $800 billion? We don't have $800 billion lying around. That is not what would be necessary to pay them back. It isn't for the United States to come up with $800 billion right away. It just would be to borrow that money from somebody else, right? If we needed to find $800 billion to pay back China because all of a sudden they don't want to hold our debt anymore, it's not like we would be, emptying our pockets and looking around in the couches for coins or anything like that. We would just have to borrow more money through the exact same process that we are using to raise the money to pay back China. Okay. And how do I know? I'm just some guy. How do I know that there would be demand for US Treasury securities? It's because the price is already so high for them. The price is so high and the yield is so low. That tells us that there's a lot of people who want it, right? if this were a situation where not a lot of people wanted our debt, then the price of the securities would be low and the yields would be high. But they're historically low. So we know that that's not the case. We know that there's a lot of people all over the world who are interested in our securities, and that's why there's no shortage of assets available to pay China back. Okay, you guys get what I'm saying with those 4 points? What else do I want to say about debt? And before we go on to the debates, sorry, 2:20. A little bit, but you know what? I think the very next thing that we have to talk about is taxes. It's not debt anymore, because if you think about our budget, if you think about the budget of the United States, it's a lot more determined by, well, okay, we control two things. We control how much money we're spending and how much money we're bringing in. The spending has to do with politics and what you choose to spend the money on. Whereas the taxes, that's more of an economic issue. So next week, I don't want to debate in general how much government spending should there be. That might be an interesting debate, but we're not going to have it next week. We're going to talk about taxes and what kind of tax policy we should have and what effects there are on Congress. Not on Congress. I read the word Congress here. What effects there are on our economy for having a particular tax rate, and so that's next week. So maybe I won't say too much about it now. Yeah, next week we'll talk a little bit more specifically about taxes, and there is a reading for next week. Your first reading will be I had it up. Why did I go away? It was it's called Taxing the Behemoth. Taxing the Behemoth is really a very short reading that I put on Blackboard. If you go under course documents, readings, it'll be there. So find that. It's something that I might ask you about on a quiz, right? That's my way of incentivizing you to actually read this. It's not even a paper, it's just a short article about corporate taxation. In this case, the behemoth are corporations, large corporations. And so this article talks about what sort of economic incentives might be affected by changing the corporate tax rate, and what economists generally think about that idea. So I won't tell you now. You can read about it. What else do I want to say before the debate today? Is very little. Whether or not it's bad that foreign countries hold our debt, that's an open question. You might say we shouldn't have to rely on foreign capital to pay for our government spending. But let me point out the good thing about it is that if there's a larger supply of loanable funds, meaning China is willing to buy these treasury securities, that actually helps keep our interest payments down, doesn't it? If they're willing to buy treasury securities, remember that graph I had before where it shifted up? That lowers the price. It raises the price of securities and it lowers the yield. And we should always think of the yield as being how much money the investor gets, but it's also how much money the government is paying. So a high yield is good for investors, but it's bad for the government. A low yield, bad for investors, but it's good for the government. It's good for the government to have a low yield because it means they're spending less of their money on interest payments, essentially. Charlotte, are you having trouble? Maybe she's being kicked out a lot. Okay, so, and then, this is what we're gonna bleed into today. Today's debate is, how bad is it to have this debt, and how much of a priority should it be to reduce it? I wrote some things on these two slides, just kind of summarizing what maybe sometimes you hear other people say, but it really isn't a lot of economic reasons, economic arguments, other than, let's say, crowding out, which I will tell you more about that in next class, but you know, there are reasons why it's okay to have a debt. It's okay to have a debt because you can always finance it with more debt, and government spending on infrastructure helps the economy grow. You have these sort of reasons. You might call these people deficit spenders who think it's okay to spend money if it causes a deficit. And then you have these other reasons why these people are deficit hawks. They don't want you to have a deficit because they think it's bad for our economy for all these reasons. But there are definitely some pluses and minuses. Rather than get into it all right now, I think I want to let our debaters go. How are you debaters feeling right now in terms of readiness to go? I think I'm gonna make Joseph a co-host. Yes, and I'll also make Anna a co-host, which means you guys will now have the power to share your documents. I think Joseph, you're the 4 of this debate. Yeah. Can I ask, is anybody in the audience starting out in the against the COVID relief package right now? Did anybody decide that they, write up your homework? Hopefully you guys submitted a homework to me that says you were against the COVID relief. Uh-oh, was it unanimous? All right, I'll just ask. Who said they were for? Send me a chat. Oh, everyone's saying they were for. Yeah, Jacob, Hala, James, Mackenzie, Christina, Jack, Nick, Dorian, Charlotte. Everybody was for. Wow, this is going to be a very tough crowd, Anna. To be fair, 80% of the country is for this COVID relief package. But Philip was begrudgingly said for. Oh, Matt was undecided. Okay, so there are some people who are on the fence here that can be swayed. That sounds great. I would like to give the floor over to Joseph if you're ready. Do you have slides that you want to present, Joseph?
Yeah, since almost nobody is for, can Anna go first?
Everyone's for it.
Yeah, so Anna's against. Is it all right if she goes first?
Let's ask her. Anna, do you mind if you go first, or do you want to go second?
I don't mind. It's fine.
She doesn't mind. Okay. Usually I have the for go first and the against go second, but if she doesn't mind, I don't mind.
Okay.
You have some slides that you can share with us?
Yes, I do.
Okay.
How do I share my screen?
You see the button that says share screen? It's green on the bottom of Zoom. You can.
Oh, gotcha.
And then you have to select which screen you want to share with us.
Okay.
Don't share anything too personal. We don't want us to see.
Try not to. Okay.
This looks good. Why we should not pass the 1.9 trillion stimulus package.
Okay.
All right, so if you're ready, go ahead. Let's all listen to Anna talk about why we should not support the package.
Okay, so simply put, the proposed stimulus is just too big. Congress has already spent upwards of $4 trillion in COVID relief over the course of this past year. I think those numbers are really hard to understand just how big they are. So to put it into perspective a little bit, 1.9 trillion is about 9% of pre-crisis GDP or pre-COVID GDP. And that's not including any of the previous packages. That's just the 1.9 trillion. Additionally, the wealth gap for 2021 is estimated at about 20 to 50 billion a month. In the proposed stimulus package, demand would increase this to 150 billion a month. So that's 3 times bigger than the estimated output gap for 2021. So I want to compare these numbers to the 2009 stimulus. This package covered only about half of the 80 billion a month gap. So it was at 40 billion a month. So with this proposed stimulus, we're looking at a package 6 times larger than the 2009 in relation to its size. There are some major differences between what happened in 2009 and what's going on right now. One of the major differences is that the future of spending wasn't looking very hopeful in 2009. Right now, unemployment has dropped. It's sitting at 6.3 right now, and it's steadily declining. We also, in 2009, didn't see a lot of hope for the future of spending, which is really different right now because we've been pumping these trillions of dollars into the economy over the past year. And it's likely as businesses begin to open up and as COVID begins to diminish, hopefully, and be contained, that people will start spending in the later part of the year. And additionally, the stock and the bond markets for 2021 are in much better shape than they were in 2009. One of the biggest concerns that I have is that we will see dramatic increases in inflation. Many economists that I've seen in my research seem that they kind of welcome the idea of inflation. We've had record low inflation for a few years now. But I think that given this stimulus size that we've never seen before, I think it's imperative that we look at the risks and take them seriously because it's really uncharted territory. One of the major risks is that we have an overshoot with this package. And then if we create more demand than we can keep up with, then that increased inflation will create a rise in our prices. And if this issue grows large enough, then I think the only option would be that we would have to increase interest rates. My concern with this is not just that we would have to increase interest rates, it's more of how quickly they would be able to respond to this. The Federal Reserve Chairman, even this past week, pointed out that they didn't think that that was going to be an issue and that they were sure that interest rates would remain low, but I think that they're not taking it seriously enough. And I think that overheating and increased inflation is a much higher risk than they are saying. There's a couple additional risks I think that we're going to run into if we pass this $1.9 trillion package. One being that the Biden administration may face issues regarding their political capital if we don't carefully allocate resources. The Infrastructure and Renewable Energy Acts are important to this administration, and I think that they might be at risk if we continue to increase the deficit, and I think that they also might lose support and funding for these acts if we pass a $1.9 trillion package. A second issue with this package would be the increase in minimum wage to $15 an hour that they're proposing. Whether or not minimum wage should be increased has been a long-running debate. There's definitely upsides and downsides. It's estimated that if this package is passed, although 900,000 less people will be living in poverty, an additional 1.4 million people will be out of work by 2025. I think it's important to point out that one of the hardest hit industries right now is the hospitality industry. And although those workers would greatly benefit from an increase in minimum wage, I don't think employers in that industry are able to afford that right now. Therefore, I think that the risks will hit harder than they already have for those industries. And I think that the bottom line is that an increase of $15 an hour will increase the deficit and cost us more jobs. This recession is different than what we've seen in the past. So I think that it's important that we approach it differently. As long as businesses are closed, pumping more money into the economy will not fix the root of these issues. The Trump administration fell short of its goal in 2020. Their goal was to have 20 million vaccinated by the end of the year, and they only achieved approximately 7% of that goal. So I think it's important that we put a focus on speeding up vaccinations, and that would end the recession sooner than pumping in money to the economy. Biden's plan sets aside $160 billion for vaccination and containment efforts. This is an important step, and and if it's well implicated, the additional stimulus pumped into the economy might not be necessary. That was it.
Okay, thank you very much. While I have you here, the slide before this, you talked about this decrease in employment in 1.4 million. Do you remember where you got that from?
Sorry,
The previous slide.
I was messing with the Zoom thing, and now I'm kind of stuck. Hold on.
Oh, you're stuck.
Yes.
I'm sorry.
That's okay. I'm just trying to figure out how to go back. Hold on. Okay.
There you go. This
Sorry.
third bullet point where it's predicted that by 2025, is that talking just from the minimum wage increase?
It was talking about the package, like it was an article.
So that's saying the COVID relief package will cause 1.4 million fewer people to have jobs?
I think it was saying, like, given with COVID, if we did that now with this package.
Do you remember like where you got that?
I definitely could find it. I'm pretty sure that was a news article though.
Mm-hmm.
I'm sure I have the source.
Maybe it was about the minimum wage though, because
it was.
One of the ideas of this package is to give people more money, right? I should let Joseph go, but we can talk more about that later. Whether this idea that if we do this relief package, it'll cause people to lose their jobs. Mm-hmm. I would really want to ask more about that, try to figure out how that might happen. But let's wait. Nick has an answer. Separate from the rest of the package. Okay, Nick, thanks.
I'm sorry. I had another slide. I couldn't get to it, so that's why, because it kind of.
Okay, so you have another slide.
So yeah, sorry.
We can give you some more time. Sure.
It didn't. Yeah, I knew I was missing something, but yeah. I guess lastly, I just wanted to point out that I think a smaller plan is a better option. It's not about getting, it's not about not funding another stimulus package at all. I think just a smaller plan would be better. So a couple things that some of the smaller plans have proposed would be lower weekly unemployment benefits. And then after 2 months of the lower benefits, then the states could provide benefits equal to 70% of previous wages. And I think that would help reduce the incentive that we saw of people remaining on unemployment. And then also just limiting relief checks to those who are unemployed or especially at high risk. I know that kind of gives way to people falling through the cracks, which is definitely an issue. But I believe that way we would be able to better allocate the money towards people who are at risk, and then potentially even give more money to vaccinations and testing, which I think would be more beneficial in the long run, and definitely get rid of the risks of an overheat, which at the end of the day would cause greater suffering and more long-term risks and potential for even future recessions in the coming years. And that was it.
Oh, good. I like that last slide. I think that helps. It's like you have an alternative. So thank you for showing that to us.
Sorry, I don't know why I had a problem getting to that.
Yeah. I think that's good, and we'll talk more later. But we should let Joseph have a chance. Are you ready to go now?
Yep.
I'm let you have the floor is yours. You can you can hear from Joseph now about why we should pass this relief package.
All righty, sounds good. Can you all see my screen?
Yes.
All righty. So
you could go full screen if you want, but right now we're seeing it inside your browser. It's up to you.
How do you go to full screen? Oh, present. There we go. There we go.
Yeah. It's up to you.
All right. So I went online and found like, the average household budget. And obviously this is not everything, it's just some of it. And taxes about 7,500, food 6,600, entertainment 2,500, debt payments or savings. I bolded that because it shows how little people are putting in savings or paying debt. So it could be either one of those. Personal cost 600 and housing costs 10,000 on average a year.
This is a year.
Oh yeah, annual. I should have put annual, sorry.
I got it.
Why we need the stimulus package. Nearly 24 million adults are having difficulty finding food. 15% of households that have children can't find enough to eat. 20% can't pay rent. Without the pause on evictions, millions would go homeless. Around 80 million adults have found it difficult to cover day-to-day expenses, and job losses are concentrated in lower income jobs, which this package is designed to help. And what's inside the 2021 stimulus bill, which is the Biden stimulus bill? You got $1,400 in direct payments, which is the stimulus checks, $400 weekly jobless payments, 25 billion in rental insurance for low to moderate income households, 5 billion in utilities help for the gas, electricity, and stuff like that. It extends the eviction memorandum to September 30th. It will be a 15% increase in food stamp assistance, 3 billion to help women and children to secure food, and an increase to the child tax credit for 3,600 up to 6 years of age, and then 3,000 up to 17 years of age. Small businesses. Small businesses is the lifeblood of the United States economy. Let me move this. Hiring 2/3 of new hires and contributing to about 44% of the national economic activity. The stimulus package includes $15 billion in PPP, which is Paycheck Protection Program. Healthcare. During the pandemic, healthcare is paramount. Basically, what a pandemic is, it's healthcare. Without proper healthcare, it would be terrible. People can't pay, hospitals will be overwhelmed, stuff like that. Stimulus bill includes 4 billion to mental health assistance, 20 billion to veterans help. And I wrote, after serving our country, the least we can do for veterans is to give them proper health care. And I've added this slide, congressional hypocrites. The 2017, and I added this to show, yeah, it's adding to the deficit, but when we did all this, the deficit really didn't matter. So at least to these people who are against the bill, the 2017 tax cut would add $1 to $2 trillion in national debt. Repealing, which failed, but repealing the Affordable Care Act would have added $350 billion. Ted Cruz gave $35 million to billionaires in the oil and fracking industry. Rand Paul voted for these tax breaks that would add $2 trillion, but didn't vote for a 9/11 bill for first responders on 9/11. United States spent $6.4 trillion on wars after 2001. And the Iraq war alone costed over $2 trillion because apparently Iraq had WMDs, which none were found, which is the whole basis of the Iraq war. And don't forget the Air Force cups. $1,280 on one cup, total of $300,000. And these are my sources. So going to here, what I'm trying to say is, yes, it's a lot of money, but at the end of the day, that money will be brought back into the economy. People need to eat. People are starving. And if we have enough money to go to war, we have enough money to feed our own people. That's basically it.
Okay. Thank you. Anybody have any sort of clarifying questions? Anyone from the audience who's like, wants to ask about something maybe they heard or wasn't sure what was going on. And sometimes I during these debates, I like to give you, both Ann and Joseph, some time to collect your thoughts or something, and then decide if you want to have any sort of rebuttal to something that you noticed the other person said and you wanted to elaborate on that. And do you think you want to take some time, or anybody want to say anything from the audience while they're taking some time? If not,
Yeah, I got a question.
okay, yeah, Nick, go ahead.
What was the, can you take it back over to the slide where you had the tax cut numbers and war spending, et cetera?
Oh, yeah, congressional. Yep.
Yeah. So when you're looking at that, I guess my question would be, if the operating assumption is that the United States is in quote unquote ill financial health, then wouldn't these previous expenditures make us less likely to be able to afford to throw another 5 to 6 trillion
Okay.
in, as opposed to more able to?
Yeah. I apologize if I didn't make that clear. So, like, the point of the slide was, if we have enough money to do this stuff in foreign countries, and if we have $6 trillion to spend on killing people, innocent people, I think we have enough money to help our people, because apparently when we paid for this, the national deficit wasn't a concern. So all of a sudden, helping your own citizens, now it's a national concern. It's not fair. So I was trying to say, like, it's unbalanced. We have $2 trillion to spend on Iraq, but we don't have $2 trillion to spend on our own people. So if we found the money then, we can find the money now.
Maybe
And we
you're
get
saying it's not a good faith argument, right?
Sorry?
Are you saying that the deficit hawks are not making their arguments in good faith?
Yeah.
Okay.
Because they spent $2 trillion on a war that gave us nothing. It gave us death. It gave rise to other terrorist organizations. But the $2 trillion being spent on our own people will be sent back into the economy one way or another.
Okay. Yeah. Let's just try to focus on the COVID relief for now. I mean, it's a point that you're saying. You're basically rebutting the idea that we can't afford it by saying actually we can.
Yeah.
Okay. But I don't want to have a debate on the Iraq War or anything like that, at least during this time. Does anybody else have any questions?
I have a quick question for Joseph.
Yes.
So like, basic question, just like you threw around a bunch of numbers and like hit a bunch of the high points of the relief bill. Can you just like summarize in a couple sentences, like without including the numbers, just like what your personal stance and like what you were trying to get across to us by using all the numbers?
So, like, my personal stance is I am for the bill. There are some parts that I think should not be included in the bill. Same as previous bills. In this bill, I don't think the $15 minimum wage should be included, because, at least in my opinion, that's not a stimulus thing. It's a federal law thing. So what I'm trying to do is, people don't have any money. A lot of people, millions of people, don't have a lot of money. This will give them the money to spend, is what I'm trying to say.
Anna, do you have anything like as a rebuttal?
I mean, I guess like my question would be, why do you think that, or do you think that all like dependents should receive the stimulus the way that we have in March and then the December one and everything? And like, do you think that we should look closer at who's getting it, or do you think that everybody should receive it again?
I think dependents, yes, because dependents take money from the person who's responsible for the household. more
But what
people
about those who aren't suffering because of COVID,
who aren't suffering.
who haven't lost their jobs?
How do we can't really prove that they did or didn't.
Hmm.
Like we can't just go around doing a national survey who lost their jobs or didn't lose their job. I mean, well, yes, you can. Unemployment filings.
I
Just
guess
go based on the unemployment filings or their like income.
That's part of the package, is to increase unemployment payments, right?
Yep.
And in fact, Anna, did you see something about it too, where you don't want to give people too much incentive to stay on unemployment,
right.
right?
I think what I found was that they were trying to, I don't know what it's at right now, but like trying to keep it or get it back to 600 a week of like additional benefits. And I know some of the smaller proposals, it wasn't to get rid of that, but it was to make it like 200 or 300, which I do think would get rid of the incentive of staying on unemployment longer.
So my rebuttal to that is this isn't permanent. It's temporary. This isn't like a 200-year stimulus package. So I mean, you can stay on unemployment. It's just that unemployment is going to run out sooner or later. So I don't see really an incentive. Because one or another, if you're like 30 years old, you're going to have to get back to work because you're not going to receive those unemployment checks for the rest of your life.
Mm-hmm. I guess like the only other thing too that I really like saw when I was researching it is like, it seems in some ways that maybe it's being rushed or like we're like jumping the gun on it. I think like the Trump administration was really kind of pushing for that $2,000 stimulus. And I mean, obviously like on both sides, people are pushing for that, but I think it kind of got like popular. And I think maybe this isn't true, but I feel like there's a lot of like pressure to go ahead and pass it now without really looking at the long-term effects. So that was just one other thing that I was thinking about is maybe just giving it a little bit more time to see what happens. I think the money that was given last year is still, there's still a lot to be spent. And I think we'll still see the effects of that like throughout this year with or without this additional 1.9 trillion, which is a lot more. So I guess that was the only other thing that I was thinking was potentially.
Okay.
And you know, and with previous bills, stimulus bills, I definitely think there was. My camera's out.
Sorry,
Oh,
I didn't mean to do that. That's my fault.
I thought it was my internet was going out.
Sorry.
So with previous bills, I definitely think there's a lot of wasted money that was included. You know, with the Smithsonian stuff like that, it's not really for national security, like for people. We gave hundreds of $1 millions in foreign aid with the last bill. So I definitely think there's a lot of wasted spending, but I think at the core of it, giving money to its citizens and only the citizens would definitely help the economy. And with as businesses are failing, to Anna's point, or businesses are failing, so we can't spend at those businesses. There's always online, like Amazon, eBay, and stuff like that. So we can spend online, which is also taxed, which would go back to the government.
What happens if I remove your co-host? Can I get you to stop sharing? Is that?
I can stop sharing.
Maybe not.
Hey, Professor, I have a question for Anna.
Okay.
So Anna, I understand like you would still want like a smaller bill. What area of the current bill do you think shouldn't be there?
I think minimizing who's getting the checks. I think looking closer at that, I think more at-risk people and unemployed people. And I totally understand that gives a lot of room for people to fall through the cracks. And I understand their systems of looking at, who's eligible is not perfect. But I think that that's one area. And it's not about just like our deficit and, trying to spend the least amount of money as possible. It's also just a matter of maybe we can better allocate that money towards other things like testing and vaccination. I know the proposed plan, I think it was 160 billion of the Biden plan was going towards testing and vaccination, which is a lot, and I think that's great, but I just think that if we look at other areas we can cut, it's again, it's not just about not spending the money, it's about where can we better save this money in this package or in other acts throughout, this administration in the next few years.
It's hard for us to know how much money is enough money. I don't expect us to have a good idea for how much 160 billion is and how far that gets you. And I don't want that. Maybe can I go through some points I wanted to keep talking about and ask the class too. You guys know what she meant when she said output gap? Anna kept talking about the output gap.
Yeah, I actually had a question about that.
Okay.
When you identified the output gap, the primary risk that you mentioned that was associated with overshooting the output gap was an increase in inflation, right?
Mm-hmm.
I mean, given the Federal Reserve's history over the last 50 years or so, it seems that the Federal Reserve has been maybe not trigger happy, but certainly more likely to tighten monetary policy more quickly than they loosen it. Why would the Federal Reserve not be able to get inflation under control by tightening monetary policy if inflation starts to show up?
It's a very deep question. This is going a little bit beyond the scope of Anna's preparation for this topic. I mean, it's a great question, Nick. I'm just saying, I don't want Anna to feel like she's on the spot right now to answer a deep question about monetary policy simply because it isn't necessarily what she prepared for. You know what I'm saying? If you have something to say, Anna, go ahead.
I don't really have much, and I don't 100% agree with my side of this. So I definitely think that's a good point. I think the only thing that I saw that I could have to say would just be kind of the way that they really assured that they aren't going to increase interest rates and almost like promising that. And I think it was like the chairman as well I know I made this point, but said that they were just so sure that that wasn't going to be a problem. And I think my only point would be, I think they're underestimating maybe how quickly that could happen. Like the whole overshoot issue. I think if they're wrong, then it could be a big problem and happen really quickly and be hard to kind of.
Yeah, I think that's fair. It's a risk. It might be a low probability risk. And I think that's what Nick is saying. There's always been these inflation fears, but for the last 20, 30 years, it just hasn't happened. It's been a long time since we've had any real overinflation. It's good to have a little bit of inflation, right? You want it to be, that's part of the mandate of the Federal Reserve Bank is to keep an inflation that's relatively low, but still positive. So yeah, once again, I don't think I want to talk really simply, like, do you guys know what an output gap is? Because we might not all know what that means. I think what she means is that there's a capacity of the economy to produce at a certain level, and we're just not producing at that level. The gap between what we could be doing and what we are doing. I think that's what that means with the output gap. And hopefully you guys have some idea too why you would do a stimulus at all. What's the relationship between a stimulus and the output gap? It's that if you stimulate the economy, you give people more money, they're going to buy more stuff, and it closes that gap. Because once people have more money to spend on goods and services, then people will offer them goods and services to sell. That's that idea. I just wanted to make sure everyone got that. Do you agree that, here's my question. Do you agree that it sometimes makes sense to have a stimulus when there's an output gap? Some people don't agree with that at all, right? The sort of the right wing economists believe that any type of fiscal intervention it's sort of like making the economy too responsive, and it causes booms and busts, and it's better to just let it happen on its own. So even this is a controversial thing sometimes. The guy Keynes, if you've heard of the British economist Keynes, there's an adjective now, Keynesian, and it refers to this idea that governments can help correct markets in the aggregate. So there's a deficiency in aggregate demand, and you stimulate the economy to try to get it closer to what would be efficient. So not everyone's a Keynesian. Some people are the opposite. Anyways, I thought that was a good point, though. We talk about the applicant. She was actually saying we went way over it with the 1.9 trillion. And maybe you guys think that too, that it was just too big. I guess the next thing I really want to talk about is jobs. I think maybe Anna her bullet point didn't quite say what she meant for it to say.
I think I might have got something wrong there.
Yeah, but it's fair to like talk about this. Do you guys think the stimulus package would increase jobs or not? And why? Anyone? Nick, you have your hand up. You can talk.
Yeah, one of the things about the unemployment measure is that it doesn't count people who have left the workforce. In other words, people who are not looking for jobs.
Very good.
So the number of people who are out of work is likely not completely reflected by unemployment numbers. And I think there's a distinct possibility that if we were to just look at the unemployment numbers, we wouldn't be getting a scope of how bad the problem actually is.
Okay. But so my question is, it's almost like your opinion. I'm just like surveying you, the class. I'm curious what you think. Do you think if we give people, how much was it? A few $1,000s, and we protect them from other, like what was it, rent? I should be asking Joseph this. A list of the things that this package does. It gives them money. Is a rent eviction. I think the word is moratorium, right?
Yeah.
Yeah.
I think you had memorandum or something, but I think you meant moratorium, and I think it does a few other things. That my question is, do you think if we do those things, it'll help save jobs or even actually increase the number of jobs available?
So statistically speaking, people who are homeless after like a certain period of time have a more difficult time finding a job.
Yeah.
If they stop evictions, at least if they're homeless, they have an opportunity to get a job easier.
Yeah. So you're talking about the people who are willing to work.
Yes.
And I think what's more determinative is the jobs that are available. In other words, I feel bad for somebody who's homeless, but it's not like if the homeless person is willing to work, the job is there. And if they're not, the job is not there. It's rather there's somebody that, if there's an unskilled labor pool, probably somebody from that pool is already going to take the job that the homeless person would have otherwise taken. I'm arguing now that it's labor demand rather than labor supply that is more determining the amount of unemployment and jobs available.
Like at least pre-COVID, and I think now there's a high demand for people to work, but now companies can't afford to hire. So those positions are open.
Yeah.
It's just they can't fill them because not enough income is coming in to pay those salaries.
I agree. So actually, I agree with that. What I didn't agree with is that there were a lot of open positions and just nobody's available to fill them.
Oh, I apologize if I.
Oh yeah, no.
Yeah, no. There's
okay.
a lot of yeah.
Does anybody else in the audience sort of what do you think? Do you think there'll be more jobs available if we do a stimulus package?
Yeah, I think there will be. I was reading something
Okay.
earlier today. Pretty much just, more people that are, more company needs to produce an actual product. Production will go up, in turn with the money that's given out, production will go up with consumers buying more stuff, leading to more people getting jobs with said company.
Sure. And it might be a small effect, but I'm not asking about, is it a big or small? I'm just asking, do you think there will be some effect to letting people have, just giving people money that they can spend? Doesn't that at least a little bit help more jobs become available? Because businesses that were otherwise thinking of shutting down are going to stay in business, and because more people are buying their stuff. They might even hire. They might even rehire people they had to let go during the pandemic.
So
And that's the point I was gonna make too. I think like small
Oh.
business relief is like a big thing, and that's gonna help jobs increase. And in my like homework that I submitted,
Yeah.
I found this like fact that it was like in January, I think 14 million people, about 14 million, lost their job or you know, claimed unemployment because their employer shut down, um, or you know, like had to lay people off due to COVID. So I definitely think that this stimulus package, especially with like the relief for small businesses, is gonna uh, increase jobs rather than bring them down.
yeah,
So you support it for, I guess most of us probably support this because of maybe some humanitarian, right? Reasons, some
Yeah.
moral reasons that is
I would like to add something that hasn't been said.
great.
I think that this stimulus plan treats the COVID pandemic more like a natural disaster than the previous plans. I think it's looking at bottom up, trying to support people in the meantime. So I think that eventually, you know, the jobs will be there. We just have to shore up like people's finances in the short term.
Excellent point.
And-
Let me summarize and go back with what you just said. It's like almost like if we don't do this, people's lives will get further and further from what's normal and how they can continue on in a normal economic way. So just to preserve our country and our economy, we might need a stimulus package. It sounds weird to say you need a stimulus package just to keep things the way they are. But if you treat it as a disaster, a national disaster, sure, it does make sense that's why you need the package, right? I think that's a great point.
can I also add something?
Yes.
So, and like for small businesses, they're receiving money, but also with the stimulus and other money that's also being freed up with rent assistance and stuff like that. More money is going to the small businesses, which that small business may be able to hire now or stop laying off people, and they would be paying more taxes. If they hire more people would pay income tax. So more money is going to the government, which would help offset the cost.
Sure. Well, I think maybe we could about wrap this up. Does anybody, we didn't talk about the cost of the rising debt. It sort of seems like we can all, we haven't really talked about this yet. We're going to talk about it next week. What happens if the debt gets too high? What happens? People like Rand Paul, you guys know Rand Paul, he's a libertarian type of Republican from Kentucky. He's a senator. His father is Ron Paul, is like the libertarian's favorite guy ever. So he's like the son of a libertarian icon. And he always votes against spending, except for those few times, I think, as Joseph mentioned. But have we really, Anna has shifted my favorite. Thanks for telling me, Philip. I think the one thing I still have to teach you, because I don't think we've fully gone over, is maybe every time we raise the debt gets higher and higher. It could have some way of slowing economic growth through something called crowding out. I explained it a little bit last class. So on Tuesday, yeah, that's our next class, I want to do a little class exercise that is related to crowding out. So let's plan on doing that on Tuesday. I would also like you to read this reading called Taxing the Behemoth, which is available on Blackboard. And I think that's all I would like you to do. We'll probably have a quiz. I think we'll have our next quiz on Thursday. And that will be this whole debt and taxes kind of combined. COVID relief, it's not something I really plan on quizzing you over, but I will quiz you over, like, what does it mean for crowding out? That's a question I would ask you. I would want you to know. I'll ask you questions about this reading, Taxing the Behemoth, and I'll ask you questions about just what are the consequences of having a debt and that sort of stuff. But let's plan on doing that on Tuesday. Oh, James is asking, what else do I have you? I can sort of give you a little preview of what we're going to do in class. It's a class exercise. So I will explain what it is on Tuesday.
Thanks.
If you want to like get ready for it, I mean, you can. It's going to be a game where I have you play the role of investors, and like you're investing for a big hedge fund, not necessarily a hedge fund, just some large group of capital, and you have to decide where to invest your money. And you can invest it into risky stocks, or you can invest it into very safe bonds. And I'm going to see what happens when the conditions change. That's what an experimental economist does. It says, oh, I'm going to take this condition and vary it like a control versus an experimental group and see what happens. So I want you guys to be able to participate in this exercise, but you don't have to prepare for it or anything, James. Just read the article on tax and behemoth.
All right, sounds good. Thanks.
Yeah. Oh, Nick wants to know if anybody is willing to debate him next Thursday. The debate is that the tax plan of 2017 was good for the US. So if you argue for, so far nobody has said they wanted to argue for it. But the idea would be, you would say, in 2017, we passed a tax plan that lowered the marginal tax rate, especially for high income earners. So they got to save more of their money, but it caused it actually increased the debt. This tax plan is something that increased the debt. Nick is going to argue against it, saying that it was bad for this country. We shouldn't have done it. We should have a more progressive, I'm assuming, Nick, that you're going to argue we should have a more progressive tax system rather than a less progressive, but maybe not. It's up to you, I guess.
That'll be part of it. Yeah.
Okay. Yeah. So we have to talk about what that even means to have a progressive tax system versus maybe a flat tax system. But is anybody, Samuel, did you ever say what you're interested in doing? Yeah, if I can't get anybody to do it, then no one will. But maybe I will be the for, and you can be the against. But I'll still try to get somebody to do it if they can.
I was just wondering because I didn't know if I could like communicate with the person beforehand, kind of coordinate materials and stuff.
Yeah, you can. Although if they're your adversary, I'm not sure you really want to tip your hand.
Only but so much.
Yeah. Okay, so did anybody else shift their opinion? I got Philip say he shifted a little bit more to a limited response. Anybody else? I'm just curious. I'm not going to give you bonus points for winning the debate or anything. But I think both of you did a good job trying to explain why we should or should not have this COVID relief package. It's very popular, I think, overall. So it was tough, Anna, to try to go against it, but I think you did a good job.
I have a question.
Okay.
Will it be considered for or against if I agree that the stimulus should be paid, but with some changes in it?
I don't know. If the changes are significant enough, then you would be against. If it's really small changes, then you're mostly for.
Okay.
Did you submit your homework already?
Yeah, I did.
Yeah, I mean, I'll read whatever you wrote, and it sort of doesn't matter if you wrote something that sounds like you're for it, but really you said you were against, or vice versa. That's fine. I'm not going to hold that against you. I think we're done with class. You guys have anything else you want to say or do? Thanks for sticking around. I liked the discussion that we had afterwards. It was good. It was a lot of people participating. I made little notes for like who said what. It's not perfect, but thank you. And I guess I'll see you guys Tuesday. Great.
Thank you.
Thanks again, Joseph and Anna.
Have a good weekend.
You too.
Thanks, Professor.
Yeah.
Thank you.